right, time for our ETF Spotlight. Energy having a rough go, of course, with the Vanguard Energy ETF down 11% over these last 3 months. Crude oil prices up this morning. This after Russia and Saudi Arabia agreed to extend production cuts. Still plenty of moving parts in the oil market today. Qatar announcing plans to leave the OPEC consortium in January as the group gets ready to meet on Thursday. Weighing in on all this now is JP Morgan's head of oil market research and strategy, Abhishek Deshpande. Should oil be up, and will it be up for more than just one session, Abhishek?
I think so. I mean, clearly what we are noticing now is that both President Trump and Prince Mohammed bin Salman, have agreed at the high level. So, I mean, going into the OPEC meeting, that uncertainty has been removed quite significantly. So we are expecting a cut around 1.2 in our balances for OPEC, plus around 150 to 170 for Russia, which is quite, which is likely to help the balances get tighter and support prices, rebuild investor confidence, which was otherwise lost in the last couple of months after their commodities rout. And in addition to that, the whole US-China trade truce is also supportive commodities, but even oil for that matter.
So is there a fair expectation that we will not revisit 50 bucks again?
We will, in fact. I think we are likely to see support from here onwards, especially in the next one or 2 months, because OPEC cuts, along with the non-OPEC supporting countries, are only likely to help tighten the market, in addition to what is likely to be also positive sentiment in the market generally for commodities. So at JP Morgan, we do expect Brent to go towards $70 towards end of this year or early 2019 for that matter.
I mean, I know Qatar is sort of a marginal player and producer, but how big of a deal is this, that they're walking away from OPEC after decades? And does it suggest any broader splintering or loss of power for the cartel?
It does. I guess from the perspective of a country such as Qatar leaving, especially a GCC player leaving, definitely brings into question a kind of a crack in the OPEC as a cartel. But at the same time, what we're ignoring is there have been a lot more OPEC members who have been added on to this whole group in the last 18 months. In addition to that, you have had additional non-OPEC members being added to the whole OPEC plus group. So I guess let's not forget that, yes, Qatar leaving definitely brings into question what's happening with OPEC right now and increases a little bit of uncertainty, although it's a small player. But let's not forget, we also have seen a lot of other players which have joined OPEC plus in the last 18 months. So we have to keep that also in balance when we view this.
I wonder how much of this rally is about the trade truce between the U.S. and China. I mean, there have been concerns about global demand and the global economy. Does that give oil a boost, this idea that the trade war isn't going to get worse?
Yes, indeed. I mean, when you look at prices, oil prices, you have had a super commodity weekend, right? A lot of things have happened both on the US-China trade war front, which has been supportive commodities from the sentiment perspective, but also what was announced as well. But on the oil front as well, we have seen the OPEC plus announcements coming through. So definitely you have had a mixture of two strong comments supporting oil. I wouldn't just put it down on US-China trade war. Honestly, the support that has come in oil, I think OPEC's statements this weekend were pretty strong and has brought back that confidence, I would say, in investors' sentiment as well. Looking at demand, we do expect demand to slow down, but more towards in 2019. But I think this short boost, and as well as a return in industrial production activity actually getting better in this quarter and next quarter based on our economist forecast, we think that we have got a little bit of a demand as well supporting oil prices for next 2 quarters. But rest of 19 into end of 19, prices should come under pressure anyway.
So to that point, what's your expectation for, say, additional marginal Permian supply in 19?
I think that's a very valid and relevant question right now. What we are definitely noticing is that one-off 400 KBD increase in August month on month that we saw definitely got reduced down to just 130,000 barrels per day in September when the last monthly data was out. We do expect that the Permian production growth particularly, but not just Permian, also the rest of the US production growth under the current oil price environment, but also because of completion rates slowing down, is going to slow down quite significantly. In fact, coming closer to month-on-month declines potentially in January January. But that phenomena is going to be first half of 19. We also expect the completions would ramp up significantly towards the end of 19 as the pipeline constraints are removed. So we do see production growth for total crude and liquids in US closer to still 1.3 to 1.4 million, but lower than, let's say, 1.9 this year. And large part of that is Permian driven.
Got it. Abhishek, thank you.
My pleasure.
Abhishek Deshpande joining us from JP Morgan.